What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about PayPal stock. I feel like a lot of people, a lot of investors, a lot of people on YouTube and everyone else in Twitter and communities are getting more and more bullish and excited about PayPal, which is good. I mean, we're seeing a lot of sort of positive sentiment, a lot of optimism around PayPal, which is again kind of representative of the fact that the company's fundamentals continue to be looking solid. And when you look at the total payment volumes, you look at the transactional history, you look at the engagement on the platform, as well as the revenue that PayPal is able to generate, the free cash flows, the earnings, the share buybacks, as well as the artificial intelligence, and Alex Chris's statements on the company's potential for profitable growth. All of that is playing a significant role in making investors somewhat more confident on PayPal over the long term. And I'm here to discuss the very more important golden cross, which has been circulating on PayPal stock. And there is a variation of that technical indicator called the super golden cross, which indeed has over 100% success rate when it does happen. And for that to happen, we need to wait 3 more days in order for us to see what is going to happen with PayPal. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like, and of course don't forget to subscribe to the channel if you're just joining us for the first time. I would really appreciate that. It really helps out the channel and helps us grow, and of course generates more engagement and gets more people involved in our community. So link's going to be down below if you want to also join and be a part of our MoneyVest community with that 16% annual discount that does expire at the end of this month. So first things first, we talked about, I did a video on PayPal not too long ago. So this right here was the overall video, which I posted again 3 days ago. March 26, 2024, whales and insiders are buying, $300 plus incoming with my entire analysis. And I basically put together the bear case, base case, and bull case expectations with PayPal's TPV, which is the total payment volume, 1 trillion, 2 trillion, 3 trillion. 1 trillion meaning that it's going to be going down, 2 trillion that it's going to be slightly increasing, not that much, about 4 to 5% per year over the next 7 years. And bull case meaning that it's going to be doubling in the next 7 years here. And transactional margin sitting at 1.95, which is what it is currently, increasing a little bit to 2.25 and then 2.5%, with revenues by 2030. $19.5 billion. That's going to be, of course, a decline from the number that we witnessed, last year, which was, I believe, over $29 billion. Base case, $45 billion, and bull case, $75 billion. Net margins of 15%, 18%, and 20% for PayPal. Again, these are again bear case, base case, bull case, and then of course we come down to a intrinsic value based on an 18, 20, and 25 times earnings multiple of $19, $59, and $137. And I was kind of, again, excited about the fact that, PayPal's in and around its base case intrinsic value, sitting roughly around $60, $65, $66 per share, in and around those levels, with a price target of $146 to as much as $338 per share, with the potential, of course, to significantly increase and, again, more than double over the next 7 years and go back up to all-time highs here. Now, this right here was the technicals, and I did mention in my video also that, technically speaking, PayPal has been really consolidating sideways, and what it hasn't done this time around is that it hasn't made a new lower low. So every single time you'll notice that we made a lower low over here. Again, this right here was the sell-off, which basically began, and we saw lower highs, lower highs, lower highs, lower highs, lower highs, but we didn't quite see a lower low. Lower low would have been somewhere over here, but instead we consolidated sideways. So that right there was a higher low, and we are now approaching that resistance over here once again. So if you do see, let's say, a breakout beyond this level, then there is potential for us to actually see that trend reversal in PayPal, and for us to see some higher highs and higher lows, and that overall shift in the pattern for PayPal as well. Now, I want to come back to this. This is a potential idea for long-term investors from a leap perspective. I'm going to go over my calendar for PayPal as well. Calendar meaning calculator on PayPal, and why it actually is starting to look pretty solid when it comes to, we're looking at 2026 in the money, deep in the money calls, 4250 strikes. We're going to come back to this idea because I do believe that there is potential there. Now, golden cross is essentially happens when the short-term moving average, the 50-day moving average, crosses above the long-term moving average, which is the 200 simple moving average. Now, this right here was a study that was done, or a back-testing statistic that was done. And in those trades, they found out that 78%, right? So 78% of the trades are winners, meaning that 78% win rate for for golden crosses, right? Golden crosses, meaning obviously the 50-day moving average, the short-term moving average crossing above the long-term moving average, which is the 200 simple moving average as well. So 78% of the trades were obviously winning trades. Now this right here, golden crosses are usually bullish, but they aren't always bullish. That is something to keep in mind, right? So, of course, just because it's happened in the past does not mean it's going to happen again. With trading, with technical analysis, we try to understand the historical patterns. We try to understand areas of support and resistance. But just because it's happened in the past, it does not mean that it's going to happen again. Now, since 1950, and this is more geared towards the S&P 500, it has experienced 36 different golden crosses. About 80% of the time, stocks are higher a year later. 80% win rate is actually pretty solid with an average return of about 10%. Now, those are good odds, but they're not 100%. When we look at golden cross signals that happen more than 10% of all-time highs, the odds look even better. That has happened 16 times since 1950s, meaning that when the markets are down more than 10% of its all-time highs, and then when we saw golden cross, 16 times that's happened, and in 15 of those 16 instances, 94% of the times, stocks were higher a year later with an average return of 16%. But this right here is where things get interesting. This is an infallible stock indicator, a super golden cross. So this is what it's called, a super golden cross, and that simply means is a modified version of the standard golden cross signal, and it's infallible. And that infallible, however you say it, and that basically means it isn't 80% or 90% accurate. Going back to 1950s, it has over 100% accuracy of predicting bear market endings and beginning of bull markets, and we can apply that to individual stocks as well. It is triggered only, and this is the important part, it is triggered only when a convincing golden cross happens after a long bear market, which PayPal was clearly in. It was in a very, very long bear market. Specifically, the super golden cross is triggered only when the 50-day moving average crosses above the 200-day moving average and stays above it for at least 3 days after spending at least 9 months below it. So those are some of the criteria that have been back tested in the S&P 500 since 1950 for a super golden cross, and that has predicted about 100% accuracy without fail. It has predicted how the markets are going to perform, and that's what's ending a bear market and beginning of a bull market. And if you come over to PayPal, so if you come over to PayPal stock here, you'll notice that this right here is when the actual bear, sort of the opposite, which is the death cross, I believe, happened for PayPal. So basically what we witnessed, I'm just gonna remove the candlesticks. I can't remember where it was. Okay, so let me see. Anyway, so what we have here is the green line is the 50 exponential moving average. So green one's 50 EMA, the blue one is 200 SMA, and you can see over here is when we saw that crossover. That was in October of 2021 when PayPal was still well over $270 per share, and since then we saw a 75% sell-off for PayPal. In fact, even more than that. So we actually saw a sell-off of close to over 81%, and now you can see the green line was below the blue line for the longest time, almost 30 months it's spent below the blue line, and more recently, as you'll notice, that it's now starting to finally cross over that blue line. You can see a very, very small crossover, and this is what the hype is all about. This is what everyone is talking about, with the golden cross coming in, and this is essentially the green line crossing over the blue line is what everyone is super excited about. So it's hard to kind of draw, so there it is. So that 61.61 is where the 50-day moving average is. 61.59 is where the blue line is, and that is the cross, the golden cross that we are referring to. Now, it needs to stay up there for 3 days at least. So next week, Monday, Tuesday, Wednesday, if you're able to see a golden cross continue for at least 3 days, then similar study done for the S&P 500 going back 1950s had a 100% success rate. Not saying that this is going to be the case for PayPal, but it does make you wonder if that has the potential to also perform very similarly, meaning that 1 year later, PayPal is at a higher price than where it is today. Another really important thing to remember is the breakout, obviously. So we do need a breakout over $66, $67. So this right here being a very, very important level of resistance. We have gone rejected here in the past. So if you do get a breakout beyond this, then of course we'd be looking at a higher high. And the next target will be all the way up to $76, $77 per share for PayPal. Institutional involvement has been picking up, so we have seen the banker fund oscillator increase, RSI, MACD, everything's kind of moving in the right direction, so that is good. The only thing that we're really going to be waiting on is higher volume and a breakout above $68 with the golden cross persistently sitting above the 200 SMA for at least 3 days going into next week, and of course that momentum carrying forward to $676, $77 per share. And then, of course, these are going to be some of my intrinsic value with some price targets to also look forward to. And finally, I want to come over to the Leaps calculator. But before that, just very quickly, I also want to go over this chart, which, again, it's a stock market chart, which we have discussed on the channel before. And what this essentially shows us is that on the way up, we do witness, a lot of thrill, a lot of belief, optimism, hope, and euphoria. And once we get up to that sort of peak here, then that leads to complacency, of course, anxiety and denial that this stock market crash or whatever the stock is coming down is not going to last forever. We're going to recover back to all-time highs. That leads to panic selling, that leads to depression, and that leads to, of course, disbelief. And the maximum financial opportunity is after the market or the stock has gone through some level of depression. We consolidate sideways, we go through an accumulation phase, and then, of course, we start that process once again. So we could very well be over here at the beginning of a very rapid recovery for PayPal, considering the fundamentals are solid, considering the management is coming up with some new ideas on how to continue with that profitable growth. Valuation's low, cash flows are solid, balance sheet's excellent. So everything's kind of lining up perfectly for PayPal to do well. Short interest was also higher, so there's possibility for shorts to cover. And at the same time, institutionals are getting more and more excited about this company as well. So if you take a look at some of the potential leap calculations here, right now, the 4250 strike, which is the lowest I could go down to, actually, could even be higher. I'm not sure, but I was able to get a delta of 0.87, which is again is close to 0.9. 4250 strike price right now is $66.99. Expirations in December of 26. We're looking at a premium of $34.60, which is only 52% of the cost of owning 100 shares. If you were to go out there and start buying 100 shares of PayPal at these prices, you'd spend about $6,699 versus if you buy, just one Leap contract, you'd be paying $3,460. So that again is 52% of the overall cost, meaning that it is about 48% cheaper than what you would pay for owning 100 shares of PayPal at the current market price. So you're paying 48% less, right? So you're only paying 52% to own about 100 shares or at least control 100 shares. And of course, you have a downside protection of 4250. So if it drops below 4250, you lose your entire premium and you don't lose any more additional capital, and simply allow yourself to take advantage of the unlimited upside potential with the break-even price of $77, right? So that is something to keep in mind, because break-even price at the end of the day is essentially calculated on the back of the strike plus the premium that you're paying. And then you can also calculate it by market price plus extrinsic value. So essentially what we're doing is the premium is $34.60 plus the strike that you have, $42.50. So you combine those two numbers, $42.50 plus $34, that's $77 per share. And that is exactly what we have for the break-even for PayPal. So it needs to be above $77 by 2026, which in my opinion, there's a high chance that it possibly is going to be, resulting in a pretty good trade from a Leap standpoint as well. So let me know your thoughts down in the comment section below. And again, would love to know what you think about PayPal and the Golden Cross and everything else that we discussed. Make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And again, welcome to all PayPal investors in the community, and of course, new investors and old investors. This is a company that has, of course, underperformed in the last, I would say, 3 years, and even in the last 7 years, it hasn't really gone anywhere. But the fundamentals continue to look pretty promising, and we'll continue to monitor how the company evolves in the payment processing space. As always, happy investing, and I'll see you all in the next video.